Thank you. A very good afternoon to all friends. I'm Sanjeev Singhal, Central Council member and Chairman of Auditing and Assurance Standard Board and a Vice Chairman of Sustainability Reporting Standard Board. I welcome you all to this 145th program of AASB for this council year, and more than 109,000 members have been benefited by these programs. Even today, 1,100 plus members have joined. And despite the fact that these are unstructured CP hours, your love and affection for the subject, for the profession is really laudable. Friends, we have three very, very dear friends and esteemed professionals with me today. We have CA Arun Jain, who is the moderator for today's session. And Arun Jain ji has been a professional of more than 3 decades standing and based out of Delhi. There is someone, he's someone for him, profession is at the core of his heart, and at the same time, he works for the betterment of the society, upliftment of the poor, and also helps a number of chartered accountant aspiring students. Thank you, Arunji, for joining and for agreeing to be the moderator of the program. And friends, then we have two very esteemed panelists, CA Deepa Agarwal and Mr. Shailesh Tyagi. Deepa, again, has been, a professional who has always supported ICAI. She is currently the special invitee of Auditing and Assurance Standard Board. She has been a member of Accounting Standard Board. She has been a member of many committees of ICAI, has taken several seminars and the webinars. And besides, she has contributed to several of the technical publications of the Institute of Chartered Accountant of India. I can speak for long for all these three people, but that responsibility we have given to Arun Jain ji. And then we have Shailesh Tyagi. Shailesh is a core, and he has largely worked from Australia. He's been to India for a few years, contributed extensively in the development of this subject when Sustainability Reporting Standard Board was at its nascent stages at the Institute of Chartered Accountant of India. I remember his sessions at the COVID time. Since then he has been serving the chartered accountancy profession. So thank you to all the three of you. And friends, today's topic is key considerations in audit of BRSR, a topic which is very close to my heart. In 3 years, we've been able to establish our Sustainability Reporting Standard Board, so much so that in October this year, United Nations Conference for Trade and Development, UNCTAD, gave our board the highest recognition. We got the best board in the world award, where 70 countries have applied. So this was really an honor of receiving such an award in recognition of what we have been able to do for the profession and for development of the subject at large. And thanks to Anil Lalji, as always, for always, organizing these programs. He has an impeccable track record. And with this, may I now hand it over to our esteemed moderator, Arun Jain ji, for introducing the subject and our two panelists. Thank you, and over to you, Arun ji. Unmute. Arun ji, you're on mute. Kindly unmute yourself. Yes.
Thanks, Sanjeev ji, allowing me the opportunity to introduce our guest speakers of the today topic. Is Deepa Agarwal. She is BCom FCA with 30th rank all over India and 5th rank in NIRC. She has a vast experience of 22 years in serving national and multinational companies in auditing and this accounting, corporate and other related matters. And she has completed her CPA, Australia. She has completed information system audit course from ICI in September 2006, certified course of IFRS from the Institute of Chartered Accountant of India, New Delhi in March 2012. Currently, she is partnered with SR Bartleby and Associates, looking after sustainability assurance, climate changes, auditing and regulatory matter. She also worked with the technical director of Institute of Chartered Accountant of India around 5 years and has assisted ICI in various publications such as standard checklists, working paper templates, guidance note on Caro, on AS16. She is working with a renowned consultancy firm since almost 16 years. She is a special invitee on ASBA of ICI, was a member of Accounting Standard Board and special invitee on Corporate Law and Governance Committee of the Institute of Chartered Accountants in 1920. She has worked extensively with on publication projects and assurance standard. She has authored 4 publications. She is also a member of Journal Committee of Bombay Chartered Accountants Society and regular contribute articles. She has worked extensively on preparation of comments, guidance, and presentation on Companies Bill and Companies Act 2013. With this introduction, I hope that today's topic she will elaborate very extensively on this topic. And this topic today is very important to our profession, because all our world, not only in India and all our world, this climate change and this sustainability of corporate governance, corporate bodies are very, very important subject of today's subject. So I think we will be get a good benefit from our exposure and this deliberation. So now I introduce Mr. Sailesh Tyagi. This is the second guest speaker of the day. Mr. Sailesh leads in a climate change and sustainability offering for consulting at Deloitte South Asia. She has over 2.5 decades of hand-on experience in the domain, with more than a decade of experience being instrumental in establishing successful advisory service for the Big Four, including biggest pure play sustainability consultancy firm in Australia, New Zealand, and India. He also played a key role in supporting Deloitte, Thailand, Indonesia, and Singapore practice. He specialized in making a business case for sustainability value creation from the natural, human, social, and financial capital business outcome and impact measurement lenses. An expert in fugitive emission in ER&D sectors, technical enable ESG solution, and has led several net zero roadmap and implementation clients engagement in Australia and India. He was on the TCFD scenario analysis panel, led the work in the development of fugitive emission guidance in mining and metal in Australia, and more recently he has drove the development of the first assurance standard for India and Indian Australian. He calls Sydney home in a US and Sydney alumni lift weight and practice taekwondo regularly, and is a true family man. Now I invite Deepa ji to deliberate on the subject.
Thank you, Arunji, for such a warm welcome and the elaborate my introduction. And thank you, Sanjeev, my fellow colleague partner and chairman AASB. And thank you, Anilji, for inviting me again and giving me an opportunity to contribute to this important topic. And thanks to Shailesh. As always, we work together. So I think, yeah, I can always say we can always leverage on his rich experience. And when the idea came for having this session, I always thought that this is something which we need to work together as a team when it comes to the BRSR. So I think what we have agreed is that kind of we'll just do a quick introduction, what we are going to cover, and then probably let Shailesh first take over about the regulations and what is his experience when he talks about the, his experience in Australia, when he works on the assurance engagement, and what is his experience on the BRSR assurance when it is from his perspective of the regulations and the actual implementation. Then I'll cover about the some of the aspects which he may not cover in the presentation, and then I'll cover on the assurance approach, the ICA standard a bit in detail, and then on the reporting aspect, because SEBI regulations are already effective. We all know that for March 2024, it is mandatory for the top 150 companies based on market capitalization as on 31st March of the financial year, which is your March 2024. And then gradually it's extended to 250 and then to 500 and 2000. So I think this is the right time. SEBI in its FAQ have already clarified that this is not something which is you can't do. So as a chartered accountant, as a statutory auditor, or even as a other professional who is competent, who is capable, who knows the subject, and who has the assurance skill set, can provide such reasonable assurance. Also, India is the first country to lead on the reasonable assurance. No other country in the world has mandated reasonable assurance yet. Australia is coming on the reasonable assurance from next year on climate-related disclosure, which probably Shailesh will cover as part of his presentation. So, Shailesh, over to you. I'll take a pause here.
Deepa, thanks so much. Thank you. And first of all, Anilji, like always, I would like to start with you. You're so good at uh, arranging these things. So thank you, because that was gold. Sanjeev, I look up to you. Deepa, you are just awesome when it comes to assurance, right? Sustainability. Arunji, we'll catch up soon. We haven't met you. Thanks for the opportunity. So what I do, what I'm covering, and it's something, it's a kind of a teamwork between Deepa and me. Um, I would like to make it very basic. I'll try to cover it in a manner that I give you a brief on what BRSR is, right? I mean, many of us know, some of us may not know. Bit around what are the challenges clients are facing, yeah? Practical examples. Role of technology, right? That's something which is upcoming and evolving. And then I'll pass it on to Deepa, right, to continue. And think of us as I'm more of an engineer who is an assurance specialist, right? I'm a certified lead auditor from Clean Energy Regulator in Australia, both reasonable and limited. But Deepa, I'm just to respect to all chartered accountants. An engineer can never be a CA, right? When it comes to assurance, it's a different mindset, and I look up to Deepa for that. So I'll pass it on to Deepa with that hat, who understands ESG, but is an expert when it comes to assurance. So I'll share my screen, if you allow me, and I have a big screen here, so I look at my big screen, getting old, I guess. So just allow me 2 minutes, and I'll share my screen. Just bear with me, please. Sorry, just 1 minute. It's all set, and I'm just trying to. Okay, so what I'll do now is getting my screen. Let me know, Deepa, when you can see it, please, as for your help as always.
Yeah, it's coming. Okay, we can see. You can do the full screen. Yeah.
Yes. See the full screen?
Yes. Good.
Let me know when you can. Can you see the full screen? Yeah.
Yeah, visible.
Okay, thank you. Thanks so much. So, like I said, I look at this screen. I started the big screen here. I'm a home office, that's why. Holiday time for us. So, first of all, thanks again. When we talk about audit, right, and I put my assurance hat when it comes down to this presentation. And when we are talking about audits, we are talking about both limited assurance reviews, and we are also talking about reasonable assurance, which is audit, right? Because if you look at the reporting requirements, companies have been getting limited assurance. And now the challenge for them is to move to audits, reasonable assurance. So we're going to cover that. But as promised, I will start with decoding BRSR, right? BRSR reporting, what it means, how it has been developed. I started in this space in late 90s, and I've literally seen the launch of GRI down to now. I was on the TCFD scenario panel, and now with the part of BRSR assurance standards. So I put everything on one slide in terms of that the interoperability of BRSR. So what is BRSR? BRSR is a framework for companies to be comparable in their reporting, right? Because every company has been reporting on sustainability. We all talk about global sustainability reports, integrated report. I mean, the world we come from, the accountants and engineer, our cross point is integrated thinking, right? Think about the business from a sustainability report and an annual, how they can talk to each other. And for that, we had something called International Integrated Reporting Council Framework, right? So that's integrated thinking. You will hear a lot about, you have heard a lot about Global Reporting Initiative, which is standard. I call it the Bible of sustainability. you want to report on any sectoral, very relevant material stuff, pick up a GRI, you'll get an indicator to report. World class. Then you talk about a macro level, how a company is really impacting the global calls on sustainability, right? So when the goals come in, we talk about 17 SDG goals. When I was young, we used to talk about UN millennial goals, right? We may have heard about poverty, education. That's what, how a country, how the society is evolving. That's the 17 SDGs. Then you may have heard about SASB. What is SASB? SASB is Sustainability Accounting Standards Board. And I would like you to remember SASB from the lens of, imagine a scenario. I get a call from Deepa and saying, Deepa calls me and says, Shailesh, they say private equity, you need to go and do a due diligence. I'm like, okay. So how will I do it? I will straight away look at the industry, which industry it is in. I'll open the SASB guidance. It covers 77 industries, and it talks about material issues. And no one can teach you materiality. You all know what materiality is. So you pick up issues in that sector from that SASB, right? Now think about BRSR from the lens of all these requirements coming together in the form of business responsibility for sustainability reporting. And of course, the assurance standards, right? Very quickly, when we go about assurance, we need an assurance standard. And that's ISA 3000 I've been using all my life. Now we have SSA 3000, right? Sanjeev gave us an opportunity to me and Deepa to be part of it. We led, we developed, and that's something which is ready to be used. So that's the assurance standard. But the requirement as such, the report when you look at, you have to comply with BRSR requirements. And those BRSR requirements have general disclosure, GD. It's principle-wise, 9 principle-wise performance disclosures you will see. And it has management and process disclosure. Now, whenever I look at this framework, it's no different to the way I've looked at any other reporting guidance, framework, standard, right? Whether you have guidelines, we have frameworks, we have standards. And then we look at general disclosure. It has general information related to the listed entity. You want to know what the entity does, what is business, operational, and value chain. The 9 principles I mentioned, like it's brilliant work done in terms of mandatory and voluntary. We call it essential and leadership indicators. Then if you look at management process and procedures, disclosures is around what are your policies, who's who in the zoo, who is the governance around it, who is doing what around environmental and social, and who has the oversight. Very important, right? So these are the ideas. Now, why this BRSR is important? BRSR is important because one, every report can be compared. Very important. Second, it makes it very local. For me, I'm giving my view. It's not Deloitte or ICI view. It's my view. It makes it very local, which is good when it comes to sustainability. But it dwells on the global frameworks. For example, what I haven't covered is TCFD. What is TCFD? TCFD came out of the financial stability for fear that one day climate risk are causing a major financial loss. And we need to understand the physical loss and transition loss, or physical risk and transition risk, right? What I'm talking about, sea level rise, extreme weather events, cyclones, how it's impacting physically the assets, and how energy transition, which is happening, is impacting the valuation of my assets. Imagine I'm a bank and I financed for a thermal fired power plant for 30 years. Great. Yeah, depending on the country and geography, it will happen. It's happening. Some countries, it may not have been happening. Doesn't matter. When the money goes in, you have a certain horizon and you calculate that, right? You calculate a return. With the whole climate change agenda happening, think about portfolio diversification, the parity of renewables, and how my assets will be priced. Am I going to get the same return for 30 years? Think about that. Stranded assets and all. That is CFD. So SASB, GRI, TCFD, SDGs, all these frameworks kind of guide BRSR, which is good. Moving on to the next slide. So very quickly, BRSR was published in 2021, May 2021, on the right-hand side of the slide. As you see, the core represents a subset of the comprehensive BRSR. We'll look at that, why I'm talking about the word core, from where it came. And in July 2023, SEBI added new ESG metrics for mandatory disclosure across 9 ESG attributes under these code, the subset, for certain listed companies in India. So this is more of a, I would say, a background from where BRSR came, when it was launched, where it's where it is and where it will go. We'll look at that. Now, where it will go, I call it the glide path for BRSR core. So on this slide, the BRSR core has elevated the corporate accountability by making it mandatory for reporting and assurance. It's both, right? Means if you look at the glide path on the left-hand side, we all know what reasonable assurance is. For reasonable assurance, 2024 financial year, top 150 listed companies. Next year, 250 listed companies. Year after, 500, and then 1,000 listed companies. And it's comply or explain basis, very similar to what I saw with ASX in Australia or the Singapore SGX, right? So that's a comply or explain basis going on. But to comply with BRSR core assurance requirements, I mean, is absolutely important where companies are struggling, or if I would say struggling, they are grappling with the challenge to have standard operating procedures. And an expert like Deepa from assurance can clearly tell you, she goes to provide reasonable assurance. If there are no SOPs in place, there is no comprehensive management information system for ESG data management, single source of truth across required 22 key KPIs. That creates an issue for the assurance provider, right? So what it means the requirements are very stringent for that independent check on section 5.1, 5.2 of BRSR core framework, right? I'm putting these sections and all so that you know, if you read as part of your work or it comes to, it will come. If the assurance is happening, BRSR assurance, I'm sure you all will be part of it one way or the other, right, in the fund. And some of it who are running it in the industry are part of it anyway. But think about how assurance agency is hired, right? It has to be independent. Standard ISA 3000 requirements. Identify the assurance standard, what you're gonna use, SSA 3000 or ISA 3000, SSA 3000. Ensure firm's ability to issue reasonable assurance opinion, can do, and then ensure audit's ability to issue reasonable assurance. Not a big problem for Big Four, right? But these are the requirements. Now this I'll cover very quickly because honestly, but I'll give you a brief on what these core means, what they cover, right? So look, even without looking at the slide, think about the core aspects for a company in today's world is energy and emissions. Emissions are greenhouse gas emission, right? When you look at water, we look at waste, right? We look at circularity of business. We want resource optimization, right? So think about these overall. And when you start to look at the aspects on the slide around BRSR core, so SEBI has mandated listed firms to report specific value chain data as per BRSR core, the new format, right? So if you see on the left-hand side of the slide, the core has 20 KPIs, right? With limited assurance. From 24-25, companies will be required to disclose 22 indicators under 9 core parameters for their value chain as well. And mind you, I'm talking about value chain. That's the operation, no, it's a value chain, right? So it's not just about operational footprint, about your upstream and downstream value chain. With limited assurance being required from FY 25-26 onwards, right? So disclosure and then assurance. So look at the value chain, look at 22 indicators. We look at the principles, 9 principles, and under those, please first report and 25-26 get assurance. So think about, do I have access to the quality information from my value chain? First question, right? So then I go and look at as a provider, assurance readiness provider, or and Deepa comes in as an assurance lead, would say, okay, great, but show me SOP, show me who provided it. Yeah. Now there is a new format which I've written on the top in the heading, has 9 questions, right? It's part of BRSR disclosure. Organization will be required to report on 9 questions as part of their BRSR disclosures. These questions are not required to be assured. So that's what it is as of now. Now on the top right, if you see BRSR core parameter limited assurance. So what you're going to look at: greenhouse gas emissions, safety, employee well-being and safety, inclusivity, right? Water footprint. What's your water footprint? Water consumption. Gender diversity. Fairness in engaging with customers and suppliers, your policies and all. Energy footprint. So emissions, if you know emissions, definitely know energy. You need to know energy, then you know emissions. Circularity related to waste management, and finally openness of business. Now, can I tell you something? Companies have been reporting about this forever. So that's the good news. If you pick up any sustainability report, companies have been reporting. It then comes down to essential indicators and leadership indicators, right? So I talked about mandatory and voluntary, right? So mandatory grievance redressal is essential, and policy coverage has to be in line with NGRBC principles. Leadership indicators are about capacity building, employee well-being, environmental impact, and I'll talk about impact in a minute, stat compliance, human rights, and POSH and social impact. The two things I would like to cover very quickly: impact and human rights. One thing I have seen, I start with human rights. When I started my career, the focus was a lot on sustainability, energy, greenhouse gas emissions, safety. Then I realized that, okay, great, this has been being reported, water came in. Then now, if you look at biodiversity came in, human rights came in. And this is the way they are getting prominence in reporting requirements. And that's why you see human rights are part of it, not only part of this, part of GRI as well now. And a lot of you can say Modern Slavery Act is there. Then you talk about impact. The word impact, I would like you to understand, because I'm literally putting it from your lens. Think about a business from the lens of input, output, value creation model. Very simple. When you go and look at a business, and we look at a business, we are just not looking at financial capital anymore, right? That's why that's why SEBI has been involved, and BRSR and all has come in. We look at it from the lens of capitals. And let's make it very simple. I'm running a business, right? And I need financial capital. And you understand it better than anyone. It's an annual report, well-developed mechanisms for regulations and reporting, right? And audits. But think about, I need natural resources. I need energy. I need water, right? But I need to also manage on these natural resources or natural capital, the output, the pollution, SOx, NOx. I need to look at greenhouse gas emission. I need to look at waste, right? I need to take responsibility for my product stewardship, right? I need to also look at the safety aspects. So that's natural capital. Now, safety can be part of anyone. I've covered it here. I've covered it in other capitals, but just for the sake of it, this is something I need. I need to manage. I need inputs, and I need to manage outcomes and impact. Think about social capital. Social capital from ESG, ESG, is all about your relationships, upstream, downstream, any relationship you may have with your stakeholders, shareholders, regulators, investors, rating agencies, right? ESG rating agencies. That's something we can discuss later. It's all together a separate topic. Now, when you look at that, and then you have human capital, employee attraction, retention, very important, right? So when you look at these capitals, they are input into my business. I have certain enablers. In today's world, digitalization is classic. I have certain outcomes. Normally, companies stop at the outcomes. What BRSR has done, it has really forced companies to look at it from the lens of impact. Don't stop at the outcomes, measure the impact around, right? So this is very quickly, right? I thought I'll just cover that.
Sorry, Shailesh, if I can add, and if you can stay on the same slide, the previous slide. Yeah, I just want to clarify one thing for the benefit of everyone. What Shailesh meant is that till now, the companies were obtaining limited assurance, but now from the next year, which is your March 24, reasonable assurance is mandatory on BRSR code. So what you can see on the slide, the 9 matrix, what Shailesh has just explained, the reasonable assurance will be mandatory, and limited assurance will be introduced on the value chain entities from 25-26 on a comply or explain basis. As you all know, you're very much familiar with the annual report. So BRSR will be required to be included in the annual report. And I'm sure you're very much familiar when you are working as an auditor about the other information concept, which I'll cover in detail. So in any case, you have to read the entire BRSR report. And now, additionally, you will be required to give a reasonable assurance also, you or any other assurance provider as decided by the board. Yeah. Thanks, Shailesh.
Thanks so much, Deepa. Thank you. And absolutely, I'm literally looking at it from the lens of the challenges, and that's why. And thank you. So this is more for the value chain, the limited I'm talking about. Companies have been reporting, so I won't repeat. Thanks, Deepa. This is gold. Thanks for clarifying. So right. So let's go to the next slide. Sorry, just start for a minute. Why now? Okay. Yeah. So what you can do is very quickly, right? The next question comes in. When you look at funding with a reasonable assurance of the specified focus areas, as Deepa mentioned, it will be expanded to include value chain disclosure, right? And what that value chain covers. right? So think about and what these BRSR core KPIs are. So let's look at both. I talked about openness of business. I talked about fairness in engaging with customers, what they all involve. So greenhouse gas footprint, scope 1 and 2. And for everyone's, you hear this word a lot, scope 1, 2, 3, 4. And I thought very quickly, I just simplified once for all. Anytime you talk about greenhouse gas emissions anywhere in the world, first assurance I did on carbon neutrality first bank in the world at Westpac, New Zealand, and down to now, the terminology is the same based on the standard code ISO 14641. Scope 1, think about I own a thermal fired power plant, not a great example, but I own, right? And imagine I own, and the coal I burn in my boilers, which I buy, the emissions due to that coal are scope 1 emissions. Scope 2 is the electricity I take from the common grid, right? That's scope 2. Scope 3, I take a cab to attend this event today. Imagine. That's scope 3. Scope 4, I make a product and through its life cycle is reducing emission, avoiding emission, scope 4. So these terms you will hear. I thought very quickly I talk about, but out of that, here we're only talking about scope 1 and 2, which is your operational emissions and the energy you take from you consume from the grid, scope 1 and 2. And then emission intensity, very important, right? Water intensity, consumption, discharge, and the rest of the slide is self-explanatory. But think about it. These are some of the parameters which companies have to look at. When it comes down to gender diversity, gross wages paid to females as a percentage of wages paid, complaints on POSH, openness of businesses, concentration of purchases and sales done with trading houses, dealers, related parties, loans, advancement, investment related parties. This is something you must be looking at as part of your financial reporting anyway. Think about inclusive development. The word SME, which has come in, that's really creating some challenges for companies. But think about input material sourced from different sources as percentage of total purchases. Job creation in smaller towns, wages paid to people employed in smaller towns. Think about a financial services bank. Think about the branches they have, and think about the challenges they may have to report all this, right? Just so for you, it's of course these are the requirements, but what are some of the challenges and how companies are really managing those? So I'll move on. The circularity I'll quickly cover because that comes in a lot. The circular economy, waste management. In terms of waste management, the expectation is around hazardous and non-hazardous waste, waste intensity, recycle, reuse, recovered side of it, recover, recycle, reuse, and then finally waste disposal by nature of disposal method. Right. So these are some of the aspects just to give you. So these nine aspects. A new addition which I was talking about is around 9 principles. And in 9 principles, if you see, I very quickly run through not all, but if you see the 9 principles, the principle 1, when it comes down to, it talks about number of days of accounts payables, concentration of purchases and sales with trading houses, as I covered, spending on measures towards well-being of employees and workers, gross wages paid to female, as I covered, right? So these are some of the aspects. So water intensity per rupee of turnover, right? So details are there, right? So what I'm talking about, the details are there, and these are the details. And related attribute to BRSR core, when we look at, it's a lot about same energy, water, but then when you look at these aspects, they are really linked to where they fall on the right-hand side. So that's essentially they relate to BRSR core. And this presentation will be sent to you. I'll share to Anilji, and then he'll share with you. Any question, you can always reach out. But look, think about 9 principles. What are the new additions? And I've added principle. What are the new aspects they have added? I haven't covered a lot of BRSR because I know Deepa is coming in, and so I've covered more in terms of the challenge, what's coming, the value chain, and all. Right. So the control environment. So very quickly, so when I go and look at a company from reasonable assurance perspective, the first question I ask is, okay, what's your control environment? And something you guys understand, right? For a tailored assurance approach, first we do in-depth risk assessment, very much like any other assurance. We look at the processes, IS documentation related to sustainability, right? And right from the top down to IT controls, we look at everything, right? Some of the aspects of enabling, what they are using. We look at the reporting, what kind of comfort we have. From materials down to payroll. If you look at this slide, from materials, energy, water, air, pollution, basically, greenhouse gases, waste, safety and payroll. We look at those aspects, whether manual, whether interface controls or automated controls, right? In this space, what I'm trying to convey here, rather than running through the whole slide, the information in sustainability comes from media reporting, you can say systems, right? I give you my personal. I can name. At Deloitte, I have Glencore in Australia automate their reporting requirements on energy consumption, energy production, greenhouse gas emissions. And I'm telling you, it was very challenging because the regulations from clean energy regulator required them to report. Carbon tax came in. There was monetary value that it was for liable. So then I realized the information comes from various. You can't really fully automate it. Some automated, some manual tax. So that's the challenge. So think about the information will come from different sources. How you really assess the risk. That's the challenge, right? What's the test there? So, all right. And I want to cover this. This slide I always keep, right from pre-engagement to planning and assurance. This Deepa is better equipped to cover this and a lot of other things, what I'm covering. All right. So this also very quickly I'll move on so Deepa gets more time, but it's essentially a key to a no surprise assurance, right? Simple. I mean, have documentation, have SOPs, have basis of opinions. Show me what framework we have used. I'm not just talking about BRSR. Think about GRI and sustainability reports, right? So one thing I would like to also convey to you, when you look at a company, you will see a BRSR report and you'll also see a sustainability report. Why they're important? People say they're important because when you have a certain framework to report, you only report as per that framework. What is the largest rule? How you are talking about the aspects in detail, what's there in the BRSR framework. You can do that very well with the sustainability report, and they can talk to each other. At the end, BRSR, the interoperable standard, you don't need to duplicate, right? They can talk to each other. So think about that, and then it comes to transition planning and all. I'll move on from the slide, but it's there just because they share the deck with you, so you can see. So, okay, these are my insights from me. Whenever I'm looking at companies from reasonable assurance side on BRSR core, for any of the reportable BRSR core-based performance indicator, if its process are found to be inappropriate and fail to provide context to the auditor, an auditor could deny the issuance of a reasonable assurance. Absolutely. And what are the challenges? The challenges are no consistency in data and computation, right? Complexity of metrics. You have activity data. You have certain activities in a company. You have conversion factor, you have emission factors, right? That's the way we go about greenhouse gas emission as an example. How you are consistent, how you are applying the right metrics, how you're integrating with existing systems and financial data, very important. They need to talk to each other. As I said, lack of review mechanism. Do you have part of internal audit or are you doing that at the line of defenses, right? SOPs, very, very important. And companies at the moment in India are developing SOPs, right? If they haven't done it already. Now, manual workings, they will stay. If someone comes and tells you I'll automate, the whole thing is impossible, next to impossible. So when you have manual workings, it's very important that you have proper control on it. And then, of course, the usual controls argument. Then it comes down to challenges, right? So I thought I just cover a little bit about the challenges in various sectors, right? So when you look at, when I talk to companies, they are at the moment talking to SEBI, talking to people, and they are asking for clarifications. They are saying, please, we need certain you can say clarity. So the clarity at the moment is around extent of activity of indicators. If you ask me, there's a sector-specific guidance. They are requesting, please provide explicit instruction on how the 9 key KPIs for customer reporting apply across various sectors. My view, it will come. It will evolve. It's a natural extension. GRI came up with those requirements over the past 3-4 years, right? It's not like it was always there. Materiality and relevance concerns. There's a challenge in assessing all KPIs, especially when some may not be material or relevant to a particular industry. So you talk about mandatory, but have you looked at from the lens of materiality? You have tried to put in the most essential ones, which may be common to all, but automatically, slowly and steadily, it will be more tailored, it will be more specific to the organization. So that reporting is just a start. Reporting is just a start. Reporting influences your strategy, your short, medium interventions, long-term goals, and your policies, right? So it's very important. It has to move in that direction. Timelines for reasonable assurance. So some companies are saying, please extend your compliance period requests. They're talking about data set testing and site visits. They're saying establish under controls. We need more stronger controls. We're implementing them. They're saying mandatory assurance can be delayed by 2 years, right? This is what my view. I'm not saying this is something which is, these are sentiments, right? And these sentiments are everywhere. These sentiments are everywhere because when a new regulation comes in, companies look at. I look at it from the lens of what is the challenge. Those dialogues will keep happening between regulators and companies and and experts. But the key is what are the challenges they are facing, right? And how we as experts can come in and help them. Now, when it comes, so I take an example of banking sector. So look, I could have taken any sector, but I thought I just take one sector because that is more specific rather than say it's from one sector. So, and it's nothing about banking sector specifically, but look, I've worked with all the sectors actually 35 years now. But let's talk about banking sector and what are the challenges they may face. Think about greenhouse gas footprint reporting. The applicability of certain reporting requirements, right? Carbon capture, steel consumption, acceptance of spend-based methodology for calculating greenhouse gas emissions. So think about footprint and think about value chain and think about these aspects, right? Think about finance emissions. Think about I'm financing those emissions. Think about water footprint. Assurance for water consumption discharge reporting, right? What is primarily used for human consumption of banks, right? Water meters may not be installed in most of its premises. Maybe not. I mean, this is what I've seen overseas, not even here. When they developed, you have shared branches and all. Do you have how much confidence you have on that water footprint or water information? Waste may not be applicable, right? May or may not be applicable, right? Think about well-being and safety. When you look at LTIFR, lost time injury frequency rate, lost time injuries, LTIs, number of may not be as relevant for a bank, right? As well, right? So these are some of the challenges. And then when we talk about fairness with customer suppliers, I talk about accounts payable, but think about the banking context, right? People who are working in the banking BFSI sectors will totally relate to this. Banks do not have purchases and sales with trading houses, but the banks do not make sales to dealers, distributors, but to customers, right? Openness of business. So think from that challenge. Think about disclosure for value chain. What is the definition of value chain? What's the scope? What is the boundary? What are the metrics to be considered for operation of purchases and sales? Definition of what constitutes sales in the banking. The 75% threshold level by value. So there's a threshold of 75% in your value chain, right? That's what BRSR requirement. And what is the threshold there on 75%? So those dialogues are happening, and I was hearing from some maybe up to 10%. I don't know. I mean, these dialogues happen all the time when the new regulation or reporting requirement come in. And that tells you the challenges. I'm conscious of time, so I'll be quick so that I don't eat on the first slide. So when you look at India, first of all, last 2.5 years now in India, or 3 years actually, in fact, almost 3, I am positively surprised. I'm so impressed with, if you ask me, I'm so impressed with all the work being done by SEBI and ICI. Very impressed. People think these requirements have come in, they're moving very fast. Not really. We are moving the right way in the right direction. Challenges are there, which are always there. So India is poised to play significant role in global movement, and with what Dr. Singhal is doing, it's just amazing. Amazing. I was following him on LinkedIn. That shows what we are doing, what role we are playing globally. Second thing, what India is doing well, experts are coming in, right? Deepa and I think about it. This is all I've done, but I cannot survive in this field without it. I cannot. People like Deepa, people like you, who are experts in assurance. So think about it's a global movement. India is playing a key role. Regulation in pipeline, what's coming? Very quickly. What next? Development of BRSR-based ESG rating system, right? Think about all the BRSR data is in public domain. Companies can be compared and rated usually by sectors. Roll out of BRSR code to all companies. Okay, yeah. Introduction of compliance carbon markets. That's in the pipeline. What more to expect? Carbon tax in line with global practices, right? What is INGA? INGA is Australian requirement, National Greenhouse Gas Energy Reporting. EU ETS, we know. Carbon tax is not there in Australia anymore, but we have something called safeguarding mechanism. The first assurance, reasonable assurance work for a mining company I did was under safeguarding mechanism from Clean Energy Regulator. The first in Australia, I remember, and that was guided by INGA, NGA. Increase in the number of, so my aspect is regulations come and go, but requirements stay, right? That was the message there. Increase the number of core parameters for BRSR, if you expect that it was more relevant. Umbrella ESG policy concepts were financial and the SFT, what is SFT? Sustainable Financial Directive from the EU taxonomy in Europe, right? And introduction of social stock exchange. So this is what it is. From on the left-hand side, I won't cover that. From innovation to reputational to value creation, all the aspects we have covered. Quickly, I won't cover this slide. I just show you because I'm going to share this with you separately. The presentation for all. And these I put in appendix very quickly. The role of technology. I put this slide for you guys. What are the features? What you expect? What is the ESG module? Because what you will, as experts, as assurance providers, assurance readiness provider, experts, how to improve your assurance practices and your report quality. Technology will play a role, and you need to assess it. What are the modules? What companies normally use? They use technology for benchmarking, for materiality assessment, for data management, right? They use goal setting. They use they are people are like one of my old clients. I will name them. You press of a button, they have a BRSR report ready. One of the largest clients in India. It's happening. Ratings response reporting. Yeah, you report every year on ratings, carbon disclosure project, report on carbon, report on water, right? Dow Jones Sustainability Indices, Standard & Poor's. Decarbonization. Companies have a roadmap to decarbonize, right? And they're implementing, right? Various tools are available, technology platforms are available. Climate risk assessment, physical and transition, they're doing that, right? Scenario testing, stress testing in mindsets, and example. And I see under BRSR, I must have helped at least 50 companies for life cycle assessment on products. It's happening, right? So this is one. And what's happening in the global? I haven't covered it because today was about BRSR, but this will tell you what's happening globally. Of course, I'm sure Deepa will. And this is more about key regulation, global focus on ESG. This will give you an idea. I talk about SFDR, right? What it means, one line. Because a lot of these terms you will hear from everywhere in public domain. I thought I'd just put one line, what it is, so that you remember, right? There's a lot there. SFDR, NFRD, BRSR, we already know anyway, all these things. And IFRS, of course, where it's moving, S1, S2. Also, in terms of how many of them are there, right? There's a lot of reporting requirements now globally, number of policies and all. Evolution, we cover that. 9 principles, what they are covered. And then maybe more discussion, right? Because 3 cases of BRSR core, assurance, value chain ratings, right? This will be, yeah. So this is the end of my presentation. And sort of being point which says I hate to Deepa is there also a lot of respect for her capability. I don't want the scenario that I'm really not giving her enough time. That would be a crime. So good. So, Deepa, and thanks for listening. I'm around. I'll switch off my camera and I'll be on mute while available. Deepa, over to you, and we'll take the questions together. But thanks again. Really appreciate it. Thank you.
Thank you. Thanks, Alish, and thanks sharing your perspective. And I would strongly suggest the participants to keep on writing the questions in the chat box. Maybe towards the end, we will take all the questions together. I'm sure these are many terms for you to absorb because so many regulations, what is happening globally. So what I'll do, at least I'll cover, some bit of the regulation in a more, simpler manner to give you some aspect from the perspective of largely from an assurance provider. And I'll just share my screen. Just allow me a second. Is my slide visible? Arunji, if you can confirm, or Shailesh, anyone? Sorry, you're on mute.
Yes, visible, ma'am.
It is visible.
Okay, thank you so much. So, so my presentation is also slightly structured in a manner, some bits have already been covered by Shailesh in his detailed presentation. So I would not cover each and everything which he has already covered, and I'll only talk about the additional aspects. So as Shailesh explained that the SEBI issued the BRSR regulation. So they make it mandatory, the mandatory BRSR reporting to the top 1,000 company from financial year 22-23. So the way you have your reporting standard, when you talk about your financial reporting standard, there is a standard, right, under which you make disclosures, and then comes the role of the assurance provider. Similarly, what SEBI did, they issued the BRSR first. They said the companies will have to give the disclosure. If you look at the BRSR format, it is running into 41 pages, requiring detailed disclosure by the companies. In some of the cases, they also require information for 2 years. So you have to keep in mind that when the company is providing information for 2 years, and you will be required to give a reasonable assurance, let's say in financial year 24, you will also be required to look at the comparative number for some of the cases, some of the KPIs, because here we are giving a non-financial information. So this is something which you need to keep in mind. And if we are not giving any assurance on the previous year number, we need to call it out. So you may see there is a very limited guidance when it comes to assurance in the BRSR core, which Shailesh explained that it is based on 9 metrics. But because we have the ISA 3000 and the ICA standard SSA 3000, which is very much based on ISA 3000. Yes, some customization have been made to make it, relevant in the Indian context. But if you look at unlike our standards in auditing, wherein you have a plethora of these standards, you have a lot of guidance from the ICA. I'm sure gradually ICA and SEBI will come up with a lot of guidance. Shailesh covered some specific elements of the guidance to be given for the companies. Yes, SEBI has constituted a ESG working group. They are working on the guidance on disclosure. Also, they are working on the guidance on assurance. But I think still a lot of guidance is required when it comes to assurance elements, and I'll cover this in my presentation. Before 2023, yes, there were some guidelines which were mandatory, like the BRR, Business Responsibility Reporting, and all these regulations are part of your SEBI LODR regulation. So for those who are already auditing listed companies, I'm sure you're familiar with the SEBI LODR regulation, listing regulation. Therein, if you see, they have amended Regulation 34, wherein they have made mandatory the BRSR reporting and reasonable assurance for the top 150 companies based on market capitalization, and later on extending to top 1,000 companies. So this slide is nothing but the same glide path which Shailesh has already covered. I just want to highlight here is that reasonable assurance is becoming mandatory. And, if you see, they're talking about reasonable assurance right from next year, 23-24. We are already sitting in financial year 23-24, and then moving to 26-27. Value chain is one which is going to be very challenging, because if I just give you an example of the value chain entities, as Shailesh explained, value chain entities is something entity you're comprising of your purchasers or suppliers. They have given the threshold which exceeding 75%, but those entities may not be in control of the company. So those companies or those value chain entities will not be the component, the per se component which you're familiar in while doing your consolidated financial statement. So which means the value chain entities may not be your joint venture, may not be your associate, may not be your subsidiary, right? So getting the information for the value chain entities and including them in your BRSR report, and then later on giving them a limited assurance is not going to be easy. So there are a lot of articles around it. If anybody is interested, you can read that. So, and that is something, that's why SEBI has given a lot of time on the value chain entities. So that is not applicable from the immediate next year. These are those principles which Shailesh has covered. So I would rather skip this slide. And I would want to take you through the format of the BRSR core for once. So my suggestion will be, if you are really interested in learning about what is this new requirement, first of all you should read the BRSR. So pick up any of the annual report of the listed company. As I said, it is already mandatory for the top 1,000 listed companies. See how companies are making the disclosure. So if I just give you an example of the in the BRSR, there's a requirement for the general disclosure, like your basic information about the company, like location, product, number of employees. So you can easily go through the information about the company. Then the management and process disclosure will be given based on the elements, and then the principle-wise disclosure. So what I would suggest you to, first of all, you should read the published BRSR report. What SEBI did, they amended this BRSR format for the companies in July 2023. So which means while you can refer to the published report, but that will be based on the old BRSR format. So there are additions to the BRSR which will be applicable from the next year, which means March 2024. Now, why they have made that addition? Because they're saying an assurance provider will have to give the reasonable assurance on BRSR core, which is a subset of BRSR. So which means they added some elements here. And because the company will have to make a disclosure first, they made corresponding additions here as well. So BRSR core is the subset of BRSR. So if I just take you to this slide straight, yeah. So this slide is your BRSR core on which you need to provide a reasonable assurance. Now, this is very much part of your overall BRSR. And if I go back to the same slide which I was discussing, so the 9 metrics on which reasonable assurance is required to be given will be required to be disclosed by the company. And as an assurance provider, you will have to check about the systems, control, all the information. The way you do your audit of your financial statement, you will have to understand the systems in place, the technology part, you will have to understand the information, how it is being recorded, are there systems in place? There could be multiple locations for a company. There could be, many components across the globe. So depending on what are the information requirement, the assurance provider will have to look at the information. Also, I want to add here, BRSR, SEBI has given a choice to the companies. A company can choose to prepare the standalone, which means just for the company itself, the BRSR, or the information for the BRSR on a consolidated basis. So they have just simply written in the guidance note on BRSR, which can be easily accessible on the SEBI website, that if you're going to, you can decide whether you want to do standalone or console. And if you do console, you will have to apply the same principle which you apply in the financial statement consolidation. So if I just apply analogy, which means you will have to include your, the company will have to include the joint venture, the component, the associate, and the subsidiary. So it's not easy. So it's not very straight as your financial statement audit, because it's not numbers. Many places, you will be having a lot of difficulty in including the non-financial information or in determining the KPIs, how to consolidate. So if you do a Google, you will find very limited number of companies who have given the BRSR on a consolidated basis, and wherever they have even given the BRSR on consolidated basis, they have defined in the reporting boundary. So there is a requirement to define. So in reporting boundary section, they define, we have included these components. So as of now, they have, because it was not mandatory, they did it in this manner. But going forward, if it's going to be consolidated, the expectation is it has to be, the component has to be included in line with the consolidated financial statement. And then same goes for your assurance. If the company is preparing consolidated, the assurance provider will have to give the reasonable assurance on the consolidated BRSR. So this is on your BRSR. Value chain entities have already, Shailesh has already covered, but I just want to highlight, this is going to be very, very tricky and challenging. A lot of representation have already been made to SEBI. Because it is not easy to get the information from the value chain entity. So first of all, the company will have to determine the value chain entities, which means the top upstream and downstream partners of a listed entity comprising of 75% of purchase sales. Give that disclosure as part of the annual report, and the reasonable assurance, the limited assurance will have to be given from 25-26 onward. So again, this is not going to be very easy and challenging. This is going to be challenging, but we have some time for its implementation. SEBI also issued some FAQs in July 2023. I'll not cover each and every FAQ here. Whatever you can see on the bullet is very much coming from the FAQs, no interpretation, nothing. I only want to highlight here is, while SEBI has written that statutory auditor can provide assurance on BRSR code, it has also written that the assurance provider or any of its associates do not sell its product or provide any non-audit, non-assurance related services, including consulting services. Now, be it a financial, non-financial, to the listed entity or its group entities. So which means this is your independence, or you can say the restriction on the non-audit services. So be very careful while you accept these engagement. If you're providing any kind of a non-audit services, then probably you will have to keep a watch that you may not be able to provide the assurance on BRSR code. So this is something the FAQ I would strongly suggest. On 7th August, SEBI issued the FAQs. They are available on the website. So you need to go through those FAQs. Also, SEBI has put the responsibility on the board. So the board of directors of the company will have to ensure that there's no conflict of interest with the assurance provider, and the assurance provider should have the necessary competence of assurance as well as the subject matter. SEBI has not mandated any of the standards, so they believe anyone can use a globally recognized assurance standard or the ICA standard, but whatever standard is being used, you need to make the disclosure in the assurance report. So they have categorically written assurance provider need not be a chartered accountant, but yes, statutory auditor can provide assurance and BRSR code. ICA standard, I just want to highlight, while it is very much in line with the ISA 3000, the global standard, but keeping in view some of the definitions like your engagement partner, your firm registered with the ICI, the standard can be used only by members of the ICI. So if you are a member of the ICI and you want to issue a reasonable assurance report or BRSR, then probably for you to refer to the standard is SSA 3000. So there is a detailed, annexure also given in the standard which can be referred for the report format. Yeah, there is also a standard on the greenhouse gas emission. So companies also get assurance on a voluntary basis on GHG, which is your 3410. So there is an international standard as well as the Indian standard, which can be looked into. There is no mandate for a separate assurance on the SSA, on the GHG emission. However, many companies do obtain it on a voluntary basis, and these statements are very much available in public domain. So you can go to the website of the listed companies and see which companies have obtained these assurance. Yeah, so this we have already covered. So I'll just skip this slide and I'll cover to the assurance cycle. So just for a minute, I'm taking back to the slide. So what is happening? These are your 9 metrics on which assurance to be given. What disclosures have to be given within these 9 metrics? They have given in the BRSR core format. Now, what is required to be done is we need to understand the assurance approach. Now, how you are going to do the assurance and what kind of report needs to be issued. So this is your overall assurance plan, which has to be one has to keep in mind. For example, your engagement preparation and preliminary procedure. Now, as I mentioned in the beginning, there is all we have in terms of the guidance, whatever you say, the guidance note or assurance methodology. We have only the SSA 3000 or ISA 3000, which one can look into it. So what is required is you need to keep in mind the way you accept a client or an engagement. So you will have to do your client engagement acceptance. You will have to look at the reporting, which means reporting is required on your BRSR core, or there is any other engagement. Many times your clients may want to obtain a assurance on a selected KPIs, let's say only on some of the KPIs on energy, on our water consumption, or on some of the other elements. So there could be a situation where you need to give the assurance on the selected KPIs or on the BRSR core. So you need to be very sure that what is the subject matter. Then you will have to determine your planning. You will have to work out on your what kind of sites to be covered, what kind of procedures have to be carried out. You will have to perform detailed testing. Now, considering there's a reasonable assurance, which is a much higher level of assurance, which opinion is required to be given, detailed testing and test of controls will be required. So you will have to look at the control established by the company. If the company is preparing the consolidated BRSR information, you will have to look at the consolidation aspect. What process or what approach is being followed for consolidation, whether information has been obtained from all the location, how the company is taking sure that the information is correct and complete. And then probably, the other stages after every procedure have been issued, what kind of gaps have been identified? Are there any misstatements? So here also you're required to determine your materiality threshold. Now here the different thing is there is no one single materiality like your financial statement. Your materiality may be different for each KPI. So for example, you may have a different materiality for your GHG, you may have a different materiality for your energy footprint, because these are your non-financial. Everything may not be measurable in your numbers, So this is something which is very different, when we talk about BRSR. And then you will have your final assurance report. It could be a clean report. It could be a modified report. You also have to obtain the management representation letter before issuance of the assurance statement. These are some of the elements which I've just picked up from SSA 3000 or ISA 3000, which is you can say the mother standard for your sustainability assurance engagement or the reasonable assurance engagement for BRSR core. One is on materiality. As I highlighted, it is very different. So there is a guidance in the standard which is very limited, but you will have to determine and document materiality in your working papers, how you have determined materiality for each of the KPIs. Work performed by expert. I really want to highlight this and cover this. Whenever any assurance is required, on the non-financial information, and you would have seen the elements, like water, electricity, and GHG and other elements. some of the elements require expertise, which a financial statement auditor or a chartered accountant auditor may not be able to measure without involving an expert. And therefore, the standard has a principle that you can involve the expert. So all of you are familiar with the work of using the work of an expert, like you use the work of a valuation expert or actuarial expert. So similarly, you will have to obtain take a help of understanding the science behind it or the measurement process behind it. Because our standards are very clear. Nowhere they say that you can just simply rely on the work of an expert. When you are issuing the report or you're signing the report, you're responsible for it. So this is something which you need to keep in mind. So you still need to understand if you want to really engage in these sort of engagement. And documentation, everything, whatever you're doing, whether you are accepting the engagement, what kind of procedures you're performing, what kind of judgments you're being exercised are required to be documented. Procedure, limited assurance will have a limited procedure like your analytical procedure, your confirmation. However, reasonable assurance require detailed procedure like your control testing, your walkthroughs, your sampling, your additional tools will be required. So this is on the overall standard. In this slide, what I have done is I have just included some of the challenges or the area assurance related areas on which challenges one can foresee, and the guidance is required from the regulator, be it SEBI, ICAI. So as I said, all we have is the standard which is being you all have seen. Reasonable assurance require additional effort. So one needs to assess whether the companies are really prepared, whether they have systems in place to get the complete information. So before the assurance provider comes into the picture or comes on board, companies will have to take measures, or company will have to establish system to make sure that the information has been obtained in a proper manner, so that one can verify it from end to end. So that's the whole objective. So this is something which is a challenge one needs to understand. And some of the areas on which guidance is not there, for example, in some cases, corporates may not be able to report on the entire, reporting boundary. For example, some of the equity, how to consolidate equity, associate or a joint venture, that is something is still a question mark. So, when you have to combine, when you have to consolidate the non-financial parameters, how will you combine that, and what kind of disclosures you will make? If the information is not available for a particular component, so can the company make a disclosure, or if not, then it will have a repercussions on your assurance report, which means if some information is not available with the company, then it has to be called out in the report. Then you have the assurance of consolidated information. So how do you deal with the consolidated information where the other assurance providers are involved? So for example, a listed company which has global operations, they may engage with more than one assurance provider. So then how it is going to be functioning, because if you see the ISA 3000 or the SSA 3000, they have very, very limited guidance on using the work of an expert or engaging with expert or using the work of another expert. However, there is no detailed guidance on consolidated information. So if any company wants to do it on a voluntary basis, there will be, limited guidance, and probably one may like to follow or look at the auditing standards where you have the exclusive standard on consolidation and the the audit of the consolidated financial information. However, this is something which is probably guidance is required. Placing reliance on figures data in the audited financial statement. So if you look at the 9 metrics, some of the information will be coming from the audited financial statement, like your loans and investment with the related parties, your related party transaction, accounts payable. Now, this information is very much part of your financial statement, and there will be a requirement to get this information from the audited financial statement. Now, if you are not the statutory auditor and you are only an assurance provider, you will have to agree with the management in terms of getting this information audited by the other auditor, or you may have to get the information and make sure that this is correct. So this is something one has to keep in mind, that some information will be coming from the audited financial statement. Also, the timeline is different, which means the timeline for the financial statement submission for a listed company is your 60 days, as all of you know. Whereas for the timeline for your BRSR report filing, it has to be with the annual report. So the timing will be different. So timing for the BRSR goes with the annual report, and so for your assurance. Whereas for filing of the financial statement, you have a earlier timeline. However, companies may decide to do it simultaneously. There is no bar on that, but as per regulations, the timelines are different. Previous year figures are not part of assurance scope, so I clarified that in the beginning, that in the BRSR code, in some of the cases, the comparative requires the information from the previous year as well. So if you are being engaged to provide assurance on the current year, then probably you will have to call it out that you're not commenting or you're not opining on the previous year number. So like you do in your financial statement audit as per SA 710, you may have to call out in the other matter paragraph. Timing of issuance of assurance report, so that I've already covered, that the timing is different. Guidance on materiality is very much required. It would be different for different KPIs, unlike financial statement audit. Use of management expert and auditors expert, again, a very limited guidance is there. But as I said, whether an engineer is providing an assurance or whether a chartered accountant is providing an assurance, irrespective, it requires a lot of skill set and collaboration. So therefore, the best is to and if anybody has read the international standard which is coming on the exposure draft of ISSA 5000, which is your master standard on sustainability reporting, that standard also acknowledges that expert can be an assurance expert or expert can be a subject matter expert. So whatever be the arrangement is, it has to be very clear that the person or the firm has to have both the expertise while giving the assurance. The other thing I want to cover is on the report format. Now, being the first year of the implementation, there might be possibilities or the situations where the company may not have the complete information or where the company is still setting up the system. So in such cases, what is required is that we may have to issue a modified report format. Now, if you look at ISA 3000 or SSA 3000, there is no example of any modification. How qualification to be drafted for a KPI? Yes, we have plenty of example for qualification for your financial statement, However, one has to get up about the qualifications or the invasive matter paragraph on the BRSR code as well. So probably the guidance may be issued in this regard. And then in some cases, management may want to get assurance on some of the KPIs over and above the BRSR code. The reason being because of the group reporting or because of the person regulation, some of the regulations they may require to be, have that assurance. So there is no clarity again whether one report can be issued or a separate report to be issued. So again, one has to look into the facts of the case. And then, as I mentioned, on the value chain entity, that is a challenge because supply chain data may be received from hundreds of suppliers and from different sources. So the timing, collection of the data, how the data will be collected, how it will be presented, and the level of assurance to be given. I think this is something that's going to be very challenging in the coming years. So these are some of the illustrative areas. While I don't deny there could be more challenging areas. But these are something which immediately comes to my mind. Okay, now the next few slides, and I'll cover very quickly. I've just tried to put down each of the metric for your benefit and giving you some of the ideas. So these are only some of the illustrative procedure. Again, nowhere written. This is not something which any of the firm issue. So to give you an example for the greenhouse gas footprint. Okay, so here the BRSR code requires the companies to make a disclosure for the scope 1 and scope 2 and even for scope 3 emission. However, for the assurance, for the purpose of assurance, what is covered is only scope 1 and scope 2 emission. So requirement is companies are expected to report the GHG emission in alignment with the greenhouse gas protocol and capturing both the scope 1 and scope 2 emission. Now, for what is greenhouse gas protocol, as Shailesh explained, it is a standard and which is a well-recognized standard. So which has been used for a number of years. So what the assurance approach could be, one has to identify the sources of emission, one has to check the accuracy of consumption from fuel of each source, recalculate the emission by applying the formulas. So SEBI has given the broad assurance approach in the BRSR code circular. And one has to look into the formulas, one has to look into the the procedure which has to be conducted. So illustrative procedure could be, for example, when you have to measure the GHG emission, you may have to do the plant visit or the site visit. You may have to do inquiries. You may have to do the checking the calibration certificate of the meters installed, and you may have to do the readings, verifying the supporting invoices. what invoices are there, the emission factor identified. So I think this is a bit technical, but the idea was to say that, you will have to apply the same, you will have to wear the hat of the assurance provider when it comes to giving an assurance, understanding how it is being captured into the system, understanding how it is recorded. Are there any controls in place to test what has been recorded and how it is getting merged into the overall system? So this is on your similarly, your water footprint. So here companies are required to disclose about the water consumption intensity, and water discharge by destination and treatment level. So one has to understand how the company is recording the water consumption. One important point which I want to mention here is, since as a statutory auditor, one has to make sure that the information being disclosed here in your non-financial report or as part of your annual report has to be consistent with your financial statement. So if you are also the statutory auditor, in any case, it is your responsibility. So keep in mind that whatever is being disclosed as part of these KPIs and these metrics should be in line with the disclosure made in the financial statement. As of now, there is no separate standard in India for requiring disclosure in the financial statement. However, if you look globally, IESSB has already issued IFRS S1, which is on general disclosure, and S2, which is on climate-related disclosure. However, the companies are still encouraged to give the disclosure. So if they're making a statement like, we will be, let's say, net zero by a particular year, have they taken any steps around that? And if yes, then what could be the repercussion on the financial statement? Whether any provision to be made, whether there is any liability to be recorded, whether any impairment testing to be done. So you will have to read. So what I'm trying to highlight here is that the interconnectivity between the financial and the non-financial information is very, very important, which one needs to keep in mind. Energy footprint, I think I'll skip this slide and I'll take one more simpler example. So for example, your employee well-being and safety. So companies are expected to report their spending on measures toward employee well-being. So one of the questions being asked from the regulator by many of the companies, what is employee well-being? Is it something which you do as part of your staff welfare expenses, or whatever you're doing as part of your medical policies? So I think one needs to see what is employee well-being expenses, and is the company maintaining a record around that? Safety incident. So if is there any manual around that? Is there a policy? How do you deal with your safety incidents, or there is any accident happening in the factory? What is the process? Is the process being followed? Is it complete? So one may have to obtain the employee well-being related policies. Like what is your HR policies, your health insurance, your daycare facilities? You need to understand or identify the expense. Now, that may not be recorded separately in your financial statement, but yes, the company will have separate records around these expenses. So one has to look into that information. Identify the recording process for injury. And then one has to carry out the procedures that, employee benefit policies may be verified with the actual availment and disbursement. So these are some of the example, and, while I may not be able to cover everything here, but just one or two more example on the financial information. So for example, there is a metric on engaging fairly with customers and suppliers. So companies are expected to report information on issues like data breaches. So everyone, we are in such a technology driven world. So cyber fraud, cyber breaches are very common these days. So what is required here is the company needs to disclose now in the BRSR, as part of the BRSR, how many incidences happen for data breaches, what are the number of accounts payable, and other factors to determine a company's relationship with its stakeholder. So what is required is the company will have to look into the accounts payable information, because the company will give the numbers here. So you will have to look into the financial information, obtain the information pertaining to data breach instances. So is the company maintaining a separate record for the data breach instances, and what kind of disclosures have been made here? So accounts payable data may be verified from the audited financial or the books of account. Check the list of legal cases of any instances of data breach. Next slide is one of the metrics is on openness of business operations. So companies are expected to report the information related to concentration of purchase and sales with trading houses Now, say since with trading houses, again, this is not a term defined in any of the SEBI regulation. So this is also being, written to SEBI to provide a clarification. However, if you look at related parties and loans and investment, loans and advances and investment with related parties, so I think these are much familiar terms who are familiar with the financial statement audit. So one has to look into the, what kind of related party transactions are there, what disclosure have been made in the financial statement, and the related party disclosure should be checked from the audited financial statement and the invoices. So this is something, the entire messaging around is whatever metric is there, the requirement given in the SEBI circular, in the BRSR code, the approach given in the circular, one has to read it together and then determine the procedure. Again, no procedure can be defined for each of the, because every sector, every client may be different. So one has to determine the procedure to get the reasonable assurance, to issue the reasonable assurance, and then maintain the documentation around it. So that is something you need to keep in mind. And now this is the illustrative report, which I thought I'll highlight a few examples on the report, how your assurance report will look like. So the way you have your report, in your other standard like US 700. So this is how your report looks like. You will start with the addressee, your reasonable assurance opinion, identification of applicable criteria. So here your criteria will be your BRSR code if you're giving a reasonable assurance. Emphasis of matter paragraph. So if there is any matter on which you need to draw attention of the users, for example, if the company has committed made some statement and you have checked and you want to highlight that as part of your report, you may decide based on your judgment. Understanding how the company has prepared the sustainability information, inherent limitations. So many cases here, I've seen the limitations are highlighted because in some cases you may not be able to measure some of the things completely. So as of now, on a voluntary basis, when the company is obtaining a limited assurance, I've seen many times limitations are being mentioned, for example, for scope 3 emissions. Management responsibility, which means the BRSR requirement to prepare BRSR is a responsibility of the management. What is responsibility? Then the standard being followed, whether it's ISA 3000 or SSA 3000. A statement that the practitioner complies with the independence and other requirements of the ISBA code or the requirement that are at least as demanding. Now, currently we have our ICA code of ethics, so which needs to be followed. If anyone is using ISA 3000, then ISBA code of ethics is to be followed. One important point to keep in mind that now globally ISQ 1 is applicable. So if you look at the International Standard of Quality Management, so if anyone is following ISA 3000, then ISQ-C1 may not be the right standard. There's an old, probably the old version. ISQ-1 will be applicable. But if you're following the SSA 3000, which is your Indian standard, ICS standard, SQ-C1 will be relevant. So please be careful when you apply these regulations. So are you following the Indian standard or you're following the global standard? So that has to be followed and clearly mentioned in the report. And then if you're using the work of an expert, yes, it can be referred, but without suggesting a division of responsibility, which means the standard clearly says you will continue to remain responsible for the work done by the expert. Yes, you can engage with an expert, you can understand, you can use it as your audit evidence, but ultimately you will remain responsible for issuing the report. An informative summary of procedure performed as a basis for the practitioner conclusion. Currently this is there, so which means you can give a summary of the procedure you have performed. However, you will see this will not be there in the new exposure draft the summary of procedures may not be required to be given. The date of assurance report and for the SSA, your Indian standard, you will also have to mention UDIN. So I would suggest you to look into the Appendix 3A to SSA 3000, which has a illustrative format for reasonable assurance on identified sustainability information in BRSR. And why identified sustainability information? Because reasonable assurance is required to be given on BRSR core, which is a subset of BRSR. So this is how the report looks like. This is a limited assurance report. So if as on date, when you will search, you will mostly see that these are your limited assurance report, which are there in public domain. And now, because SEBI has mandated reasonable assurance, at least from the next year, you can see the reasonable assurance report will be available. So if you start here, so it is addressed to the board of directors. One has to say what kind of limited assurance being undertaken, on what sustainability indicators or the parameters, and how the management has prepared, what is being followed. So, for example, here the company has followed the guidance note on BRSR. So, BRSR is the guidance note is the format or the criteria being followed. What is the inherent limitation? What is our responsibility when I say assurance provider's responsibility? Which standard is being followed? Whether IC 3000 is being followed? What kind of procedures have been performed? This is the summary of the procedures. So the standard permits you to include a summary of the procedures. What has not been covered? What is the exclusion? So in a limited assurance, we are not testing control. So for example, the exclusion is we are not testing the operating effectiveness of management systems and control. Limited assurance conclusion. Again, limited assurance is a negative assurance saying that nothing has come to our attention. It causes us to believe that the company's identified sustainability indicators included in the BRSR report are not prepared in all material respect in accordance with the criteria. So this is the example of the limited assurance report, but I want to show you the reasonable assurance language also. Sorry, I think it's not, it was there in the previous slide probably. Yeah. Or maybe I'll open a report at the end to show you the reasonable assurance language also. Yeah, here it is. So in a reasonable assurance, you will say, in our opinion, the BRSR core or the selected KPIs for the reporting period so and so have been prepared in all material respect in accordance with the applicable criteria. So you see, this is what the reasonable assurance is requiring, that you will have to talk about the opinion here. Whereas in limited assurance, you will have to talk about nothing has come to the attention, which is more like a negative assurance. There is a huge difference in the procedure. So these are some of the illustrative to explain to you. For example, in reasonable assurance, you may have to do interviews for data collection, identify the people who are responsible. You will have to do the walkthrough of the data collection, analytical procedures on consolidated data. There will be a larger number of site visits, review of the IT system, as Shailesh has explained, and your test of details. So there could be detailed procedures. And if anyone really want to see, I would suggest you to also go through the exposure draft of ISSA 5000, because therein you have a very detailed guidance on your reasonable assurance. So what kind of procedures could be followed? What could be the possible steps which can be taken? So while that is still exposure draft, but it's a good document to obtain an understanding. I can skip the slide. So this I just want to highlight. So this is a global study performed by the International Federation of Accountants on sustainability disclosure. So I think the recent version has also been released. So what they do, they cover 3 years in their study, and they see how many companies have obtained assurance, whether it's a limited assurance or a reasonable assurance, and who has issued the assurance. So whether it's the audit firm or it's the other assurance provider, which means any other professional. So 1,283 or 1,350 companies reported ESG information in 2021. Usage of SASB standard and the TCFD framework has increased significantly. So Shailesh just explained these frameworks. So these frameworks are nothing but your global standards which were being used till date for your reporting of the non-financial information. So what India has done, SEBI has issued their own BRSR format, and they have taken leverage from the GRI standard. So you may find some of the guidance in the GRI standard when you look at the terminology being used in the BRSR. Also in 2021, what they noted, 57% of the assurance engagement were provided by audit firm, as against 61 and 63% in 2020 and 2019. So this is something, the numbers are being changing, and SEBI has also maintained that it is provision agnostic. So, any assurance provider who's competent enough can provide, provided the board approves the appointment of the assurance provider. Also, the last bullet, 80% of the assurance engagement resulted in the limited assurance report. Only 7% have resulted in reasonable level of assurance. Balance engagement resulted in either moderate level or other level of assurance. So if you look at this, largely the number of reports being issued were the limited assurance report. Some of the challenges being faced by companies, as I highlighted, the preparedness of the companies is important to assess. Extensive data requirements. So you have seen, I mentioned BRSR, your BRSR disclosure, which has to be given by the company, is running into 41 pages. further revised by way of July 2023 circular. So now totaling, they have some 145 total indicators, extensively covering quantitative and qualitative KPIs. So make yourself at least familiar with the requirement. BRSR core framework require reasonable assurance. So one has to understand what is reasonable assurance. As an assurance provider, as a strategy auditor, you may want to engage with the companies and to explain them what is the reasonable assurance, how it is different from limited assurance, what kind of efforts are required, what kind of systems and controls are need to be established by the company. Then second is your cross-functional collaboration and data management, a very, very important point. BRSR requires collaboration across departments. So if you look at the data, it is running from employee well-being to HR policies to R&D to related parties to operation and demand. So it has to be cross. So it requires the same level of attention and from the board of directors and from the audit committee as it is being given to the financial statements. So again, this is not restricted to a particular division or a department in a company like a sustainability team. No, because it is something beyond it. Because now, the information and the data is so vast, and reasonable assurance will be required. So which means companies cannot take a chance. So this is something very, very important. And obviously, there is the expectation from the stakeholder, from the regulator. So BRSR is pushing companies to move from doing no harm to contributing proactively for a positive change. So every company wants to take steps because this is something which is being closely watched by stakeholder. Even the kids these days want to be very, vocal about it, that we want to do a sustainable clothing. We don't want to wear this brand, or we want to do this, because they understand the buzzword sustainability. So I think that there is a very increased expectation and pressure at the same time from the various category of stakeholders. And therefore, every company is making effort to, get the information right. And therefore, the assurance is being mandated because you as an assurance provider will play a larger role. Once the assurance is given, it will add definitely credibility to the information. And therefore, it is very important that before you engage with any of the assurance engagement, you need to understand what is the intent behind it, what kind of information is being given by the companies, and how it is being measured. So these are some of the challenges. So way forward for the assurance provider, as I mentioned, one has to understand the subject matter. So if it's BRSR core, please understand the entire BRSR. If you're giving assurance on selected information, please see whether it is understood acceptable by the wide set of users. Otherwise, you have an option to include restriction on use para in your assurance report. See which standard is being applied. Understand the difference between reasonable and limited. I'm sure some of you would have conducted limited assurance engagement in the past year or familiar with it. Reasonable assurance involve additional work and effort, as I explained. Additional effort required if reporting on consolidated basis. Guidance note on BRSR has clarified that it is not mandatory. The companies can choose to prepare the information on a standalone basis or on consolidated basis. So that is something, it's optional. But if the company has decided to prepare the information on a consolidated basis, the assurance provider should also gear up, because you may have to engage with different assurance provider sitting at different locations, or you may have to cover it through your own, teams or your networks. Refer existing assurance report. That's the best thing. Look out for the existing assurance report in public domain. Look out for the IFAC study, which I just presented on the screen, that you can do a Google and you can find the IFAC study. Involve experts if required. So expert could be your assurance expert if you're a subject matter expert, or could be a subject matter expert. So if you're a chartered accountant, you're issuing a reasonable assurance, you may have to engage with an expert, because subjects like GHG emission, water consumption, or your energy consumption, waste management, you may have to involve the expert to understand how it is being measured, how it is being calculated, and you may need to obtain a report from them. Assurance on comparative information, if you're not giving, please call it out. Modify report. Do not hesitate to modify in case complete information is not available. Keep in mind, any reasonable assurance engagement which you will do under the SEBI regulation is going to be regulated. So like SEBI has a power to regulate the listed companies, and so it is very much important thing to keep in mind that there is going to be oversight by SEBI if any of the reasonable assurance is being done here, and enhance your knowledge. So keep on reading. So there is nothing I mean, there's not that you can't learn what is being we have spoken so far. So there are a lot of plenty of literature available in globally for the new standard being coming up. Every country is moving towards something or the other. However, as I said in the beginning, India is the first country to requiring reasonable assurance. However, reporting standards, every country is moving ahead. This I think I've already covered. Yeah, this slide is on the global, kind of a situation. Shailesh did presented some of the developments, but here I just want to highlight. In India, we do not have a standard like S1, S2. So S1, S2 is a requirement to give the specific information disclosure in your financial statements. So you will have to look at S1 and S2. So this is not relevant for India, but if any company has adopted these standards or the group company has adopted these standards, it may be applicable. So these are applicable from 1st January 2024, wherever these have been adopted. The other wider set of a standard are the European Sustainability Reporting Standard. I'm sure many of you would have heard about these set of standard also. Very, very vast. 12 set of standards have been issued. And the Corporate Sustainability Reporting Directive, the European regulation under which the limited assurance has to be given. So they are also starting with the limited assurance. And then you have the ED exposure draft on sustainability, which I've already covered, a very vast and the master standard, which once issued will be relevant for all kind of sustainability assurance engagement. This is framework neutral, whether you're adopting ESRS, whether you're adopting IFRS or you're adopting anything, this is going to be applicable. It provides guidance for both your limited and reasonable assurance engagement. And then you have something coming up in US also, California climate disclosure. But what I would just want to highlight here is that limited assurance on scope 1 and scope 2 emission is required in the first year of reporting and then transitioning to reasonable assurance in 2030. The recent development is in Australia. From the next year onwards, reasonable assurance is required for your climate-related matters. However, other than that, there is no country which is mandated, and these are just some of the examples to tell you that the every part of the world or across the globe, these standards are being discussed, and everyone is looking into how the companies are preparing up for giving these disclosure, and then gradually moving to assurance, limited to reasonable. So these are on the global developments. So I think that's all from my side, and I will just take a pause and if Shailesh is here, probably if he want to add anything, or maybe we can start with the questions.
We can start with the question, Deepa. No, thanks. I think you covered it so well, like always. Yeah.
Thanks, Deepa and Shailesh. There are a few questions from audience. Now, I just read out, any of you can answer to those questions. The first question is, how do we ensure that indicator leadership or essential are benchmarked from the Indian point of view, rather than being dictated from a non-Indian sources, since some KPI might not be material from the Indian point of view? Thanks. Any of you can answer for that.
No, I can start and pass it on to Deepa. Yeah. So one, the good and bad thing about mandatory reporting requirements, the framework is set, right? So what's mandatory is mandatory. The debate over whether it is material or not material won't work. Now, but the question is amazing because that goes back to the things which companies and reporting entities are trying to raise over the years to make it more specific to local requirements, which you covered, India, what's material to them. However, when it comes to BRSR, it has a requirement to do materiality assessment, right? So indicators may give you those framework, those principles, 9 principles will give you your decode, as Deepa covered in detail, I also covered. But then if you look at the aspects, they are something companies have been reporting. It's a fair work done by SEBI in terms of asking for something which is absolutely relevant to most of them, right? Some of it I raised the questions, right? Of course, I'm kind of being a hypocrite here. I said these are the challenges, but if you look at energy, emissions, water, right, waste, say diversity, they are pretty basics. Over to you, Deepa. Yeah, please.
No, I think you have covered well, Shailesh, and I think India has taken its own path. It's not just the leadership indicator and the essential indicators that is very much aligned with the Indian point of view and the framework. So they have, as I said, there is already a guidance note on BRSR, and SEBI is also in the process of issuing further guidance. So it's not something they have just. In fact, SEBI has taken a lead to issue a standalone framework mandatory for the Indian entities. So they have not adapted or adopted, let's say, S1, S2, or any of this framework.
Okay. Then the next question is: should the company take certificate for BRSR? Is it mandatory?
Okay. So this is, I think we have already covered. It's not certificate, first of all. It's a reasonable assurance. It's mandatory for the top 150 listed companies starting from March 2024, and then in a gradual manner to the top 1,000 companies from by 26-27. So reasonable assurance is mandatory, and a company will have to take it from an assurance provider who is competent enough, who can be a chartered accountant, who can be an engineer, or any other professional.
Okay. The next question is: FMCG, white goods, non-coal burning companies, etc., end up outsourcing transportation for inputs and final product. So, is it fair to exclude diesel emission from scope 1 and 3? Shall I repeat the question?
Like to cover, Shailesh? Yeah, you can repeat.
Yeah.
FMCG, white goods, non-coal burning companies, etc., end up outsourcing transportation for inputs and final products. So, is it fair to exclude diesel emission from scope 1 and 3?
Sure. So, no, great question. So, first of all, let's go back to the definition of scope 1 and 2, right? Scope, what you need to report is when you're looking at, I'm looking more from the reasonable assurance side. And when you look at that, you have to report scope 1. If you're consuming diesel, you're buying, you need to report. It's not scope 3, right? Scope 3 will be when, but from your question, I'm just thinking more. Okay, fair enough. You're saying, all right, so we have to really look at very clearly what needs to be reported, 1, and then also need to look at what's not in your strictly applied scope 1, 2, and 3 greenhouse gas protocol requirement. And if it's outside your boundary, it's scope 3, you have outsourced, then please think about upcoming value chain, right, requirements. So whether it's covered, you really have to strictly go with the definition of BRSR. And if scope 1 and 2 you need to report, if it's scope 3, please start exploring, because you need to collect that information in the future, right? Right now, no need to worry about it.
Okay, thanks. The next question is: when are the clarification and guidance on BRSR co-respected?
Question which is outside our grade. So probably regulator will have to issue the guidance.
With your vast experience, you might be expecting that when this regulator will come out with these clarifications.
Yeah. So ongoing work is happening. I think I explained it well. I mean, no one can really, speculate. But, as I said, I'm pretty impressed with what the work SEBI is doing, the pace they are doing, what ICI is doing, how they are collaborating with entities. We work with all the sectors, right, over the years. And when we talk to them, dialogue is happening. But yes, I definitely would like to agree that in the spirit of the question, which is this clarity should come as soon as possible. Absolutely. I mean, if you look at the guidance which is coming from other regulators, it's also expected, right? And it's important that they come, because it really helps streamline, report, it relieves the pain a bit. So yeah.
Yeah, and probably before March, and as I said, the timelines are different here. So True. It's not linked to your annual financial results filing, which is 60 days. Here you have a time till annual report. So I think one should wait for guidance, and SEBI is in the process of issuing detailed guidance on disclosure side also, which is very, very important for the companies. Our role as assurance provider will only, kind of come, and we can only take a view once they are fully ready or have the complete clarity. So, yeah. All right.
Then next question by queries. He understands that exemptions of BRSR is allowed. Is sustainability report issued under any other mandate? So is it in such a case both BRSR sustainability report, GRI, RI, etc. required for the sake of assurance?
Okay, so if I've understood the question correctly, first of all, there is no exemption. So if you're doing something on a voluntary basis by following any international framework, be it GRI or be it any other standard, maybe because of your requirement of the group company or the parent company or voluntary basis, there is no exemption. So if you are covered within that top 150, 250, 500,000, you are required to prepare the BRSR reporting and get the assurance. So it's unlike your financial statement regulation where you do a consolidation and then you may get an exemption for intermediary. There is nothing like this here.
Look, just to add to what Deepa is saying, yes, the requirements are pretty basic. I'm sorry, Deepa. I mean, I'm thinking talking like someone who has only done this work forever. Now, I can only do two things as I joke with Deepa. I can drive an Uber, pick you guys up, or work in sustainability, right? I can't do anything else. And they're very basic requirements. Companies have been reporting on that. And I really like the theme of this, all the assurance, readiness, reasonable assurance, value chain. Those are the real challenges. More guidance is required. The reporting requirements are basic. Companies have been reporting. Come to exemption you're talking about, and your question is more around, look, I'm already reporting that information. Do I need to report? Yes, you need to report. You need to make sure that is a BRSR report, as Deepa mentioned, and you report. There's no exemption that way. But yes, you can always make your reports talk to each other, right? If you have reported something in BRSR, which is regulatory requirement, then you look at your voluntary requirement, which is sustainability report or integrated report, right? And you can make it talk to your BRSR. You can refer to BRSR. So you're not duplicating efforts. Absolutely. But exemption is like any other regulatory requirement, right? You cannot exempt. There's a requirement, and we need to report. Yeah.
The next question is, thank you for providing a comprehensive explanation. Could you please elaborate on how BRSR incorporate consideration for biodiversity and address aspects related to sustainability finance within the context of sustainability reporting in India?
Yeah. So I'll quickly cover and I'll pass it on to Deepa, right, from the assurance side. Like, let's think about, look, when you look at the reporting requirements, look at the nine principles. When it comes to biodiversity, companies have been reporting on biodiversity under the sustainability report, right? And they report. If you look at GRI, there's a requirement, they report. When it comes to BRSR, the specific requirements of 9 principles in BRSR are around the areas I covered, right? We covered circular waste, circular economy, waste management, looking at my slide here, which we covered, so I don't miss anything. Safety, right? In that, human rights you see, as I covered, but when you start to come on biodiversity, companies have been reporting. You have to report. I think your question is more around the guidance. As I said, it's an interoperable standard, right? It's being built on GRI and others. So what you can always look at frameworks and align and report. The information which needs to be reported is very clear. If you look at the form of BRSR, it's very clear, right? What they need, it's look at that Excel sheet, it's pretty clear. If you download and you see this is what they need. I think your question comes down to if I'm already reporting on that, if I'm reporting under CDP as an example or something, if I'm reporting under GRI, how I make it align. You can make it align. You're already reporting. You have the raw information reported under BRSR as per BRSR requirement. Mostly it will align. The other question you had is more around biodiversity and sustainable finance. Look, sustainable finance is something, if you ask me, the requirements are there in BRSR and India-centric. Not much work has really happened in India. If you look at EU taxonomy, we don't have a taxonomy. I mean, I've been involved heavily in Australia, on the financial sustainable finance side. And there's a lot of guidance from MAS. There's a lot of guidance from Australia. If you Google, there's an institute. They're doing amazing work. I'm sure in India, when that taxonomy dialogue will start, which will start soon, you will get a lot of guidance, right? At the moment, if you ask me, just to clarify, there is no guidance on sustainable finance under BRSR at the moment. But Deepa, correct me if something you have heard, I haven't seen in that BRSR.
No, I agree with you, Shailesh.
Thanks. Please suggest a published report to go through BRSR that accordingly you reflect a complete coverage of the reporting requirements.
Okay, I can't mention one report. That will be little,
everything to be covered by that report. I think that Deepa has already given some module form.
Yeah, so there are many reports. I mean, you can just do a top 1,000 listed entities. Every company will have a BRSR report. You can pick up any company you want.
Yeah, I'll give a cheat sheet kind of a thing. Sorry, Deepa, please carry on. I'm talking
No,
over
no,
you.
go ahead. So I think all reports are, you can refer to any of the 1,000 listed companies report. The only thing is I want to highlight is there is a revision in the BRSR format. So there are additional elements which needs to be reported from the next year. So just pull out the list of from the BSE NSE website, your top 1,000 listed companies, look at your top 5 and just download the reports and read it. I think that's the best way.
Yeah. I think just approach it from the lens of relevance and size and all, right? So when I benchmark a company, I use 3 kind of parameters, right? On x-axis, I look at the company size, sector, and geographic location, right? So in this case, geographic location is not a challenge. So look at a company of your size, like by like, as they say, your sector and all. Why do you look at pockets of excellence? Some companies have been reporting forever, right? And they're more ripe systems to report. Look at one of the report from the top listed companies. And z-axis, let's also look at some of the reports which are like the third angle you can look at is more around the value chain, right? Imagine you're reporting and you want to, some companies, value chain are reporting, right? So look at that. If you go with that lens, you'll get enough guidance, not only for now, but also for the future.
Okay. The next one, how long it may take to make it implemented mandatorily? I think it is already mandatory for big 1,000 companies. But
Yeah,
yes,
assurance for
every company. How long it may take to make it implemented mandatorily? So I think it's a top 1,000 companies are already mandatory.
Yeah, and the assurance is mandatory for 150. So, yeah.
Yeah.
In case assurance is done by statutory auditor, do the engagement partner of BRSR assurance and financial audit needs to be the same, or can they be different things?
No, there is, I mean, the SEBI FAQs clearly mentioned the statutory auditor can be the assurance provider, but you have to keep in mind the non-audit services restriction and independence. So if the firm or the auditor is not providing any non-audit services and approved by the board, then probably the answer is there is no need for any different person. At the same time, there can be a different person also. So yes, the word is can be. Okay, so it's not a mandate, but yeah, the person can be.
Thanks. What is the difference between BRSR and integrated report? IR also cover non-financial items. Why separate disclosure and reporting?
Yeah. So I think good question. So look, it's literally like voluntary requirement versus mandatory requirement, right? Same concept. You have a framework, and a company has been reporting on what they think is relevant, right? And that's why they do materiality assessment, they apply GRI, they apply International Integrated Reported Councils framework, integrated thinking. It's all aligning towards ISSB, all those boards and all we haven't discussed today, what changes are happening, though Deepa covered it very well with IFRS S1, S2 little bit. We can talk about that, those changes. So alignment is happening of all these frameworks and all. That's a different topic for other day. But if you ask me, think about a company which have been reporting either standalone or a consolidated report or integrated. But that's voluntary, right? You report on what you think. Think about how you really mandate, how you really compare companies in India on common parameters. That's the role of BRSR. It really brings on some aspect. One of the question was about India centricity, right? That's where. And what is the need? The need is India-centric report. So you compare, you rate, you improve performance on key aspects. And the aspects I have covered are absolutely essential for India, right? Energy, greenhouse gas emissions, right? We talked about circularity, right? So inclusivity. So that's my take on it. And there's another aspect I have, which I'll leave it to Deepa. I'm sure Deepa will cover, but that's my take. Over to you, Deepa, please.
Thanks. The next question is, will there not be potential legal risk in making ESG disclosure that are misleading? how will it affect the overall reputation of such otherwise reputed well-known companies, especially holding companies and auditors?
It's a great question. Deepa, you want to take it and I'll add? Yeah, or I can take it, whatever you say. Yeah.
You can take it and I can add. It's okay.
So, if you look at, I'm literally checking, I wrote a paper on it, but anyway, I'll cover and I'll share it later on with you. So, what's really happening, where all this is evolving now, is towards something called greenwashing, right? And I can always give examples of my work back home. When it comes to greenwashing, the greenwashing laws are coming everywhere in the world, right? Um, and in Australia, companies already being fined, US as well, but I'll talk about where I've worked and I've actively worked on this. So, for example, I really had encounters where companies, past clients have called me and said, hey, Shailesh, the greenwashing laws are coming. We have been reporting. We think it's relevant. We think our short and medium term interventions are very relevant. But can you look at it? Can you provide me guidance on whether my claims are vague or unqualified? I'm not able to substantiate the information. I'm not using absolute. I'm using absolute claims. I'm trying to compare. Am I unknowingly omitting relevant information or exaggerating it? Right. When it comes to aspirational claims, how can I really look at making it more relevant? Sometimes I've talked about third-party certification, but then am I providing enough information? Am I also applying some images? Can I do it? Anyway, so think about that. Then think about certain sectors which are more prone to greenwashing than the other. We talk about FMCG sector as an example. Think about it. Think about health products. So that's my take. And enough guidance is available. I was on a panel recently, literally on that theme. So that's something, enough guidance is there. In fact, a country like Australia have really provided, please Google it if you don't reach out to me, I'll send it to you. There's very clear guidance on how you can really avoid these greenwashing things. India, I'm 100% sure very soon these guidance will come and the regulations will come. Because first aspect, reporting. Second aspect, reporting governance, which is through assurance, right? And the third aspect for me is how we really make sure that you avoid greenwashing. Over to you, please, Deepa.
Thanks. The last question is, if a listed company is not publishing BRSR without reasonable assurance, what would be the legal consequences, regulatory issues?
So if I can answer that, it's like a non-compliance with a mandatory regulation. Any of your, as I told you, this regulation has been embedded in the SEBI LODR regulation, and the regulator SEBI has power to take the action. It could be penalty, fine, depending on the non-compliance with the regulation. So this is something which is non-negotiable, to put it very simply, because the mandate is coming from the markets regulator. And therefore, SEBI has made it mandatory in a glide path manner. So as of now, it's only applicable to 150 companies when it comes to insurance. But yes, when it comes to disclosure, it's applicable to the top 1,000 companies. So companies do not have a choice. If they're not doing it, then be ready for the fines or the penalties. Like, for example, if you do, what will happen if you will not the company will not file the financial results? Or if you will not you will not issue the limited review report within time, what will happen? Immediately the news comes, in the press world, the company has not submitted the financial results have been delayed. So there are repercussions. You can have a look at the SEBI LODR regulation. There could be anything, which may happen. So this is something mandatory and needs to be followed.
Is there any monetary limit for this, any penalty?
So that is covered within the SEBI LODR regulation. It's not, it can be more than monetary. That's all I can say. But there is a section within the LODR regulation that talks about the non-compliance with the regulation. So it's a very comprehensive section. And then you will have to read it with the SEBI circular. So there is no separate penalty being carved out for non-compliance with one of the regulations. This is only one of the regulations out of those, SEBI regulations, which are very, very extensive.
No, absolutely. I think just think about. I mean, this question has been coming a lot. I mean, let's not even talk about that. If you ask me, I mean, look, non-compliance with BRSR is a regulatory requirement, can result in penalties and fines, right? As Deepa mentioned. I mean, LODR talks about it, but the reputational loss, reduce investor confidence, right? And it's something which is, absolutely. I think the other question people ask, I'll just add to it very quickly. 1 minute left is more around assurance. How about if I can't get reasonable assurance? that question is more potent, right? If I'm not ready, what will happen? So I think that question is more, I can say.
Yeah.
Thanks. This end of all the questions. So now, sir, thanks to both the speakers for very wonderful and elaborated covering all the aspect of the subject. So I thanks to both the speaker, to Deepa and to Shailesh. Thanks. Now we are going to close this.
Thank you, Arunji. Thank you for your time. And thank you, Shailesh. And thanks everyone for listening to us.
No, thank you. Thanks so much. Thanks for the opportunity.
Thank you. Thank you.
Bye-bye.
Bye.